Hello guys, welcome to my video how I made around $10,000 as a 18-year-old prop trader last month. I got $9,000 in prop firm payouts and around 1 to 2 in private capital gains. Today we're gonna do a trade breakdown, which trades I took. First of all, I'm gonna show you that I actually took those payouts in the Trading Pit dashboard. It's a legit firm that I use. So you can see right here, the 25th February of 2026, I got $4,000 payout here. And on the 10th of February, I got 5,100 payout. Let's click on this. Here. You see my name here. And you see the $5,000 payout. And then here, you see here, $3,900 payout, and it's all legit. So the first trade that I took was AUDCHF. I was on the daily time frame. I saw that we were really bullish. We were a little bit overextended, and I would like to see some swipe of lows, like these lows are descending and they're building a lot of liquidity. In the meantime, but I saw that the policy shift from dovish to hawkish, meaning from a bullish policy, from a bearish policy to a bullish policy in the Australia, made the AUD really strong, and we could never swipe those liquidity lows. That's why when I saw that we had some kind of liquidity swipe on the 4 hour, I was really alert that we could have a position, because we have this liquidity grab, and after the liquidity grab we had this break of structure, meaning that in this impulse we can see after the retracement another break up. So when you see at the fractals, we see here a breakdown and then a break up, meaning this is our supply zone, which is in control right here. This, yes, okay. So I just waited for it to come back, and it tapped this supply zone already. So now you could have already taken a trade and then traded up, but I wanted to wait for a shift in structure, or like this, and just trade the breakout. So I waited, and we got a shift down. So this was the high, which was in control, and I just wanted it to break so we could create another demand zone, which by the way also took this liquidity here and all of these liquidity lows. You can see it here. It took the liquidity, now made a change of character. We are in this demand zone, so I was happy to long from this demand zone for around a 1 to 1.5 R. Let's see. And the trade played out beautifully. So this was the first position. Moving on to the Euro JPY, I was on the daily time frame and I saw that we had a demand flow, and we are probably going to go up higher again. This. So I was just waiting for the retracement into my demand zone, and then the position to trade it up higher to see higher prices. On the 4 hour time frame, we also see that this demand zone which was created took liquidity before, which makes it strong. It always has to take liquidity for me before forming the demand zone, otherwise I don't see it as a strong demand zone. In this impulse, when we wait for the retracement, we always try to trade toward liquidity, which was situated here. But in this instance, I realized that it doesn't have to liquidate this low, because we actually tried to go up higher before. We have here a liquidity low, and we tried to break this high, and oftentimes when you don't break the high which is in control, you just come back to take out the low which failed to break the high, and you use it as liquidity itself. So I realized if we take out this low right now, you could already see higher prices and not liquidate this one. But this one would be, of course, the preferred low to liquidate and the A++ trade. But I just looked what happens. Okay, right now I was already ready and waiting for the market structure shift, like this or like this, to break this also. And I was just looking what happens. Also, we are in this demand zone, like this refined little demand zone, which blows liquidity. But I was just looking at these things right now. Okay, so now we have this breakdown, which means that this is the high in control, and if we break this high, we could already trade it up higher, like this. So let's see. Okay, right now we broke the highs again, the lows again, and now this is the high in control, like this. At this point, I just made a buy stop. If it reaches this point and it breaks this point, then I'm gonna trade it up higher and stops below the demand low. And we broke it. I had around a 1 to 2 to the highs, like this, and it worked out beautifully. Another trade that I took was GBP Swiss. We were bearish on the daily time frame, and we should see a retracement, but the momentum was really high. So I was looking at this on the 4-hour time frame, at this breakdown. I was looking that we are in this higher in this supply zone. We took liquidity before moving down lower. We have kind of a chain, like a flow, a supply flow, like this and like this. So I was just looking to follow the trend. I was looking internally what happens. We have this liquidity low, a liquidity high, and I was just waiting for the retracement, tap the liquidity high, change of character, and then move down lower. What happens here? We tapped it, and we have seen some manipulation here and the change of character here. As you can see, we went down lower and then broke the high and then broke the low again. Right here we have a break up, then a break down, which confirmed to me that we could see lower prices. I wanted to see a break, like a real candle closure, and this happened. Then I had stops above the highs, and I targeted a new lower low, like this, for 1 to 2. We are tagged in, and the position went to my stop loss, like this. I want to be transparent, and I'm gonna show you not only the wins but also the losses. This was a valid setup for me. The only thing that was not so good was that I didn't wait for the retracement on the higher time frame, but in an impulsive market it's also possible for my strategy to trade it with the 4-hour time frame again down lower. So it wasn't a really bad trade, it was a good loss, and I still made profits at the end of the day. So I want to be transparent with you guys. Another trade that I took, which highlights that you have to be flexible and you can be a little bit more aggressive if the market itself is very, very impulsive, because if you always wait for the retracement, for the perfect retracement, the market will always go against you and it will sometimes go without you, and you have to be flexible, like how the markets move and in which phases we are in. So I was looking at gold and I saw that we are on the higher time frame swinging bullish, and we are in this order flow of 4-hour demand zones. We took liquidity before creating them, which makes them valid here and here. So now I was just waiting for the retracement and then the trades higher. We got liquidity in this move, in this impulse. We got here, and we got here, and basically here. So what I realized at this point was that we didn't actually have to retrace completely down lower. We could, because gold was so impulsive at this point. We could just liquidate this high, this low, just off of liquidity, and then break out higher. So I was just managing that and looking how I can trade it. I was just waiting first for lower prices, and I saw that we liquidated it so hard, like so fast, and I was waiting for it either to come back down lower or break this high and just go. To be cautious, not to be cautious, but to be safe, I was making a buy stop here if it breaks out really fast, so I can catch the move. I was having the stops around here, and I was targeting like a 1 to 4. I normally don't target this, but when the market is this impulsive and going up higher and higher, like gold in February and January, you could do that. So I was waiting for it, and then we broke the highs, and I got tagged in, and it just rallied and took my TP. So this was the video, guys. Don't forget to like, comment, share and subscribe, and type in the comments which videos you would like to see in the future, and if you like these videos.